What's going on, guys, and welcome back to the channel. So when you're trading, do you struggle to identify the best trends, and do you know exactly when to enter and exit a trend? So in this video I'm going to be taking you through trends and how to profitably trade the best trends. So let's roll the intro. For those of you that don't know me, my name is Pep and I'm here to make you a better and more confident trader using simple techniques and strategies. If you think this video is providing value, can you do me a massive favour and hit the subscribe button? And that's going to help the channel out so much. Now, there's a lot of misconceptions around trends, how to trade them, how to identify them, and I want to go through that in detail in this video. Now, one of the biggest misconceptions with trends is a lot of traders or gurus out there think they can just catch the bottom of the trend and ride it all the way to the top of the trend. Now, this is extremely unrealistic, and this is exactly what I want to go through in this video. Trend trading for me over the years has been extremely profitable. Being on the right side of the trend is so important, and the techniques and strategies I'm going to show you in this video are going to help you out so much with your own trading. So what we're going to do now is jump into the charts, and I'm going to talk you through trend trading strategies, entries, exits, how to identify trends, and most importantly, how to make the most amount of money trend trading. So let's jump into it. Okay, so what I'm looking at here is Bitcoin on the daily time frame. Now, let me start off by saying, this is what I mean when you can't catch the very start and the end of the trend. So it's extremely unrealistic that somebody is going to take a long position here and close the position out here. That's just not going to happen. It's nearly impossible to identify the bottom and top, or vice versa, the top and the bottom. So for example, the first Bitcoin crash was back in December 2017. So it's very unlikely you take short positions here and then exit the position here. Now, the best way to trade trends is you first need to identify the trend, and then you want to capture the middle part of the trend. Because like I just said, it's extremely unrealistic you're going to catch the very start and the end of the trend. So before we go into that, let me first take you through how to identify trends. Now, there are many ways to identify trends, but I typically identify trends using moving averages and just looking at market structure. So looking at market structure, to identify an uptrend, you have a series of higher highs here and higher lows. And again, vice versa, a downtrend, you're going to look at something like this in regards to price action. So what you have here is lower lows and lower highs. Now, the key thing to remember here is looking at this uptrend here, once we have a new higher high, this level of market structure has been broken. And again, we have a pullback here, we have another impulse move, and again, we break this level of structure, creating a new higher high. And this is how you simply identify trends, just looking at market structure. Now, as again, it's the same with looking at a bear trend. You have the lower lows here, here, and here. And again, each time we make a new lower low, we're breaking market structure. Again, we have a pullback, another impulse move to the downside, and again, we break market structure, creating a new lower low. So that's the simple and quickest way to identify trends. So now we know how to identify trends. How do we actually trade trends? When's the best time to get in? And how do we exit with the most amount of profit as possible? So let's look at Bitcoin as an example. So again, I'm on the daily time frame here. And as you can see here, this is clearly a range, and the way to identify a range is just looking at the chart, looking left to right, price is moving sideways. So a good way to first identify a trend is once you see the breakout of a range, that normally signifies a shift in the market. So what we're doing now is we're moving at the accumulation stage, the range, and then we're going to push up and possibly create a trend. Now, this is never guaranteed, but this is a good early indication. Now, this is not the start of the trend, because when I say the top and the bottom, you're not going to take a long position here and ride it all the way to the top, as I've said in the beginning of this video. So what we can then do is we can bring on the path tool on TradingView. So again, this is a free tool to use in TradingView. And we can start to mark out the trend, and we can start to mark out the higher highs and higher lows. So let's just start at the bottom here. Now again, this is not the beginning of the trend, but we'll mark it out just so we can look at structure. So we have a rally to the upside here. We pull into market structure here. This is the top of the range. We have this shallow retracement. And then we have another impulse move up. And again, we've broken the range here and we've broken this high here. So we have a pullback. Let me zoom in. And then if we look here, this part of the move here has broken structure levels again. So we rally up. We have another shallow retracement here. And then we rally up again. So just looking at this leg of the move, we can clearly see, a trend has started, because look what we have here. We have a higher high here and a higher low here, higher high here and a higher low here. So now we've identified a trend, what's the best way to enter a trend? And as a trend following trader, what you want to do is look for the pullbacks. Now, you don't want to ideally take long positions at the higher high, because you're not getting most value out of the trade. So all you do as a trend following trader is you are trading the pullbacks. So if we look here, we pull back, where do we pull back into? Previous market structure here. Again, we failed to make a new high yet. We have another pullback here. This is more of a complex pullback. And then we create a new higher high, shallow retracement here, and so on. So the best opportunity here is what you do looking at structure is, here we have resistance. What do we know? Resistance can turn support. So now we have this higher low and we have this possible support level. So this level here would have been a great place to take a long position trying to catch the rest of this trend. Now let's mark up the rest of this trend quickly. So again, let's just look at structure. Have an impulse move. We have this pullback. We have another impulse move. Again, we've broken this high. A pullback. An impulse move. A pullback. An impulse move. And look here, this is going to be key. So we're going to go through this in a minute, but the best place to really ride the trend as best as possible is to use trailing stop losses. Now again, this is on the daily time frame, so this could have been potentially a really long trade, but what you want to do is trail your stop as soon as a new higher high has been reached. So let's just say hypothetically we've entered a long position here. Price has come down, we've broken to the upside, we've created this new higher high. We then have another pullback, and then as soon as price breaks this higher high here, what you want to do is move your stop loss to the next higher low. And again, you keep your stop loss here. And again, this works on any time frame. I'm just using the daily time frame as an example. Now, in an ideal world, you probably wouldn't use this strategy on the daily time frame. You'd maybe trail your stop loss per daily candle, but this is how I normally use my trailing stop losses on the lower time frames, but we're just using the daily time frame as an example. And again, you want to leave your stop loss here. Again, look what happens here. We create a new higher high here. We have the pullback again. Then as price comes up, as soon as this higher high is broken and we've broken market structure, you want to move your stop loss to the next higher low here. And all you do is you keep repeating this process. So again, higher high here, higher low, broken market structure, move your stop loss to the next higher low here. Again, higher high here. Again, you move your stop loss here. And all you do is you move your stop loss until you've been taken out of the trade. So this leg of the move here would have stopped you out of this trend following trade that you've taken all the way back here. Now, in regards to percentages on Bitcoin, this would have been a pretty much 200% return following this trend trading strategy. Okay, so if we look at Bitcoin at the moment, look what's happened here. So we've violated market structure. So we've violated this higher low. So what we could now see is we could possibly see a shift in the trend. So if we look here, this could be, well, this is a lower low, this is a lower high. And again, now we're looking to create a new lower low. And what more than likely will happen is we have a lower high and so on. This could potentially happen. But at the moment, we've created this lower low here. So we could be looking at a shift in the trend for Bitcoin because this level of structure is broken, this level of structure is broken, and also this level of structure is broken. Now, in regards to catching the trend to the downside, what you could do with Bitcoin, again, is wait for the pullback into previous market structure, which could be this kind of area here. This could be a good opportunity. And then you'd look for short positions. Now, this is the most optimal way to catch the trend to the downside. Now, like I said, you wouldn't have caught the trend here because how do you know this is the end of the trend without levels of structure being broken? And again, this works for any time frame. Now, if we drop down to the lower time frame, so one of my strategies is, what I like to do is identify support and resistance zones on the daily time frame. So say, for example, let's just say we have resistance here, support here. And as we reach a level of resistance, we drop down to the lower time frames, and then we look for a shift in the trend, drop down to the hourly, and then we start trading the trend to the downside to the previous support that we've plotted on the daily time frame. So let me show you an example of that. Jump to a Forex pair. Let's look at Euro USD. Okay, so let's look at this level here. We've marked this level out as resistance and it acted as resistance here. So we're looking to catch the trend to the downside. Now again, we're not going to catch the very top of the trend and ride it all the way down. You know, that's not very realistic. But let me show you how I'd identify this shift in the trend. So if you see here, we have this would have been a bullish move on the daily time, on the lower time frame, sorry. This would have been a bearish trend on the lower time frame. So we're looking to take a small part of this bear trend on the lower time frame. So bring up my replay tool here. Jump to the 1 hour. Okay, so we've spiked up. This is still an uptrend, still an uptrend. And look here, look what's happened. We've now violated this level of structure here, but we're still not in a position to take a short position yet because we need to identify trends looking at lower lows and lower highs. So let's carry on. Okay, we've broken to the downside. We're going to pull back up. Now, look what we have here. So we have a lower low there, lower high, lower low. And on this pullback here, this is where we could have started to take short positions trying to trade this trend. Now, this pullback here also coincides with a level of structure. So we have this level of structure here. Again, it's acted as support here, acted as support here. We broke down. And then, as we know, support can turn resistance. So we have the pullback into resistance. Then we can start riding the trend to the downside. So at the moment, we have our stop here. Again, we've created new lower lows. So what we then do is we move our stop below above this high here. Again, we continue and look, this would have stopped us out. So we would have got, a fair, well, let's have a look. This would have been possibly a 30 pip move. Let's have a look. This does probably roll to the downside again. But at this point in time, because we've broken this level of structure here, we could have seen this sort of price action. Now, in hindsight, that didn't actually happen, but this is how you keep on the right side of the trend. Now, another tip to be on the right side of the trend, and obviously you've probably heard of this quote, the trend is your friend, is to use moving averages. Now, I'm going to show you a cool little trick in TradingView. Now, this is really good if you have the free version as well and you don't have the option to have many indicators. If you click on indicators, and you want to search for this one, so multiple moving averages using only one indicator. And what that'll do, that'll bring up this moving average here. If you go into settings, this includes the 20 moving average, the 50, the 100 and the 200. Now, I don't typically use the 100, I just use the 20, 50 and 200 moving average. And I like to keep it on the simple moving average. I don't particularly like using the exponential moving average. So if we go back to Bitcoin, let's use that as an example. Click on the daily time frame. Let me remove the drawing. So what you can do to identify trends is you can use structure, and what you can also use is moving averages. And a good rule of thumb is if price is above the moving averages, then you'd only look for long positions. So if we look here, the Bitcoin has really respected the 50 moving average. So it's bounced here, bounced here, bounced here, bounced here as well. Had a bounce here as well. So looking at this, looking at structure, you're on the right side of the trend, just looking at market structure, creating higher highs and higher lows. And for added confluence, you're also above the moving averages. So we're above the 200, which is a slow moving average, and we're above the 50 moving average as well. Now, I don't typically use the 20 moving average on the daily time frame as it's a bit too quick for the daily. And then if we look here, so as we've identified with Bitcoin, we've broken structure here. And we've also started to, prices closed below the moving averages. So we've closed below the 50. We've also closed below the 20 as well. And, this is, pretty key for today actually. So today's the 19th of May. If price closes below the 200 moving average, we could really see a more of a shift to the downside. So yeah, a really interesting point for Bitcoin at the moment, but let's look at the last crash. Let me zoom in here. So again, we're above the moving averages here. We then reach this top here. We start to break down. We started creating lower lows here. And we also started to move below the moving averages as well. So yeah, a couple of ways for you to identify trends, how to trade trends, and how to really best enter trends and keep hold of the trade as long as possible using trailing stop losses. Now, this is a really simple strategy and format to use when looking to trade the trend. Now, I hope that's been helpful. If you have any questions, please let me know in the comment section. Again, do me a massive favor, like the video and subscribe to the channel. That's going to help me out so much. Hope this has been useful, and I will see you in the next video. Cheers, guys.